Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Welcome back to Uncle Charles' YouTube channel. We got some big economic data releases this week, September 11th, September 12th, CPI, PPI. We also got the monthly US federal budget. Uncle is expecting volatility this week, and I'm totally looking forward to trading it. But what really interests me the most is the charts. And in my last video, Uncle talked about the 50 DMA, the 50 daily moving average. And I posed the question, can it hold? And I will only trust that it defend it if it can recapture some lost levels, which was the 553.4 and especially that 555 level. The bulls failed not once but twice. They found selling pressure there. And on Friday, holy moly donut shop, that they break down that 50 daily moving average. Incredible. One thing I pride myself on is trying to keep things simple. I value simplicity. And we talk a lot about how the market goes into the trend phase, the chop phase, back to the trend phase, back and forth between each other. Since breaking down that 555, I've mentioned that this is bearish. To stay bearish below 555. And we've seen how support turn into resistance. This is not about bragging. This is about education. I just want us to remember these concepts, and we can learn from it in real time. Okay? Remember the trend phase, some call it the expansion phase, and then the chop phase, some call it the consolidation phase or the contraction phase. They cycle between each other. Right now we are in the expansion phase, a bearish one. The question now is, how low can we go? Well, I have a few targets. Okay, I do have a few targets. We'll start with the simplest one is the 50% fib level, which is at 537.7. That will be a target. We do have a gap all the way down at 534. Okay, so 537.7, gap fill at 534. Now this, before I give you my lower targets, bears might like this one, but I do want to mention this down trend line, guys. All right, we had the breakaway gap at the down trend line, and that's a bullish one. Very possible we could back test it as well. And if that's the case, another target I'd have would be 531.2-ish, which also happens to align with my fib level at the 38.2 fib level. Now, the big one would be a couple more, right? The 200 daily moving average, which is all the way at 513.4 right now. But the thing with that one is it slopes up, so it's constantly changing. But there is a zone that I'd be watching all the way down at the 518 down to the 511-ish zone. Now, the reason is that's an area of imbalance. All right, we have an area of imbalance right here. I'm trying to make this shape right here. All right, we had an area of imbalance right there. Okay. All right, we move some stuff out just so you guys can see what I'm trying to say. So in this area that I'm giving you guys, this rectangle, you guys can see it's based on the August 13th candle. When you look to the left of it and you look to the right of it, there's no candle trading in its space. That means in this area, there's an imbalance. It's nothing but buy orders. Does that make sense? Nothing but buy orders in this area where I'm highlighting. So there's an area of imbalance. In light gaps, the market makers like to fill those imbalances. All right. And light gaps, they often get filled, but they don't have to get filled right away. But it's good to know where they are just in case. So we had an area of imbalance right there, and that just happens to be where the market paused on Friday. Okay, so now do we all know what an area of imbalance is? Okay, you guys can see there's an imbalance of buy orders. Now the market makers need to fill it with some sell orders to give it balance. So that brings me to the next area of imbalance and why this zone would be a target of mine. Down here, this is a big area of imbalance. Down here, you see this candle, August 5th candle. Left of it, you look to the left of it, you look to the right of it. There's no sell candles nowhere. So there's an area of imbalance all the way here down to the 517 to the 511 is zone, like I said. And it's in balance with too many buy orders. Okay? Which happens to be where the 200 daily moving average is as well. Okay? So, does the Bears, do the Bears have reasons to head down lower? In my opinion, yes, they do. Okay? They can fill this area of imbalance. They can back test this trend line and then try to bounce. If they break it down, I'm thinking they could try to head down to this area of imbalance, also aligning with the 200 daily moving average. Okay? So yes, Uncle is bearish right now. I've been bearish since the breakdown of 555. And now that we broke down the 50 DMA, it's definitely looking even more bearish. All right? Now, as I said earlier, we have big data releases this week, CPI, PPI, and all that happy stuff. So anything can happen. So while I give you guys my bearish targets, if we drop down lower, SPY would need to break down 540 and 537.7 to trigger those moves to the downside. That's my bear case scenario. But I got to give you guys my bullish case scenario as well so we can be prepared. So as of right now, you know, SPY went to a low around 540-ish. Okay, we look on the dark pool order. We head all the way down 540-ish. We had some big dark pool premiums going around that those 540 levels. The question is the plan to push up from that level, or is it to push below? And if we're above it, obviously there's a chance we could bounce. And if we're below it, then we know that big money was dumping and we are heading down lower. Because we look at this 549.5-ish. There's a big premium there, over $1 billion. Mind you, these come in 24 hours delayed. So you look at the previous day, on Thursday, the day before, the close was around 549.6s. Okay, that happened to be the low of that day. The low of Friday was also happened to be around 540-ish. So that's how we know if we're below 540, we know using dark pool, we're heading down lower. But if we're above 540, then we know there's a chance that the bulls can bounce, but they would need to clear resistant levels. I have resistant levels at 542 and the fib level at 544. That's a critical one. If bulls can recapture these levels, then I would favor some type of relief bounce, possibly all the way 548 to the 550 zone, maybe to back test that 550 DMA or something. Okay, I can't fully get bullish though unless we recapture that 50 DMA, give us a false breakdown setup off the 50 DMA. Then maybe I'll be a little more bullish in favor we head back up to 553.4 and 555. And I tell you, if we can recapture 555, I would definitely favor all-time highs and possibly a new all-time highs, because the RSI is definitely reset. Okay, I don't trade based off the RSI, but it's worth noting that it's definitely reset for the bulls if they need it. Okay, guys. So I know I said a lot. As far as areas of imbalances go, there is an area of imbalance up here, right? Around 556 to 553-ish. All right. So the question now is which zone will the market makers choose to fill first? Okay, all the way back down to 517 to 511ish, or back up to 553 to 556. Okay, so if you guys want more information on the areas of imbalance, it's definitely helped me a lot as far as, you know, profit taking and charting and stuff. Definitely YouTube more. There's people out there that explain it much better than me. All right, so let's move on. Triple Q definitely looking bearish as well. All right, broke down a lot of fib levels. It even closed the gap that we had around 551ish, 551.3ish. Okay, so that's a resistant level. 450, 451.3ish, 453, 456 are all resistant levels as of now. I can't fully get bullish unless Triple Q can recapture some fib levels, which is at all the way at 456, and I have one at 458. So as long as below, I'm overall bearish, and for more downside, 447.5 needs to break down, and I'm telling you that it's we're getting very close to the 200 DMA here, which is around 441.3ish. I do have a fib level at 443. All big targets as far as an area of imbalance goes. Triple Q has a big one all the way down in the 425ish to the 434ish zone. So there's a big area of imbalance down there. And there is an area of imbalance up above around 471 down to 465. All right. Can't touch those unless, you know, like I said, we recapture this fib level 456. Then possibly we can head up higher. But right now it's looking bearish. Maybe we chop a little bit. But if we break down 443, then no chop. We're just going to drop down even more. Elevator down, guys. Stairways up, elevator down. You guys know the drill. All right. NVDA. Wow. And all the, I freaking love it. I love it. You know, we got to learn from this, guys. All the banks are 155 target. 150 price target. All those people would oh my goodness. I hope no one was that gullible. They dumped the crap out of this, man. And it's still dropping lower. You guys see this. Where did we close? We closed around 102.8. It's just above a fib level I have at 102.5. Like I always say, trust no bounce unless we recapture some lost levels. This means 104 needs to recapture. 106 need to recapture. Yeah, guys. Let me zoom to the left a little bit. Yeah, I got fib level around 110.8ish, 112. Yeah, I feel more comfortable calling bottoms when fib levels can recapture. Yeah, it's looking bearish to me, guys. Yeah, I need to see lost levels recapture, guys. So 104, 106 need to recapture. 108. I got one at 110.8, 112. All right, those are resistant levels. But I tell you this, if we break down more support, 101, I got one at 99.6, 97.4. More downside is possible. All right, let's move on, guys. Woo, look at Tesla. What a big dump. Look at that. Had that big old bounce from Wednesday to Thursday, and then, man, big money profit taking. I tell you, that's the market makers moving that. That's banks, that's whales taking profits. Question is why? Must the nice report his AI and talks over Tesla revenue, blah, 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 blah. Oh, that's going to make a lot of people uncomfortable. Will there be more downside? Well, I'll tell you this. I am going to stay bear bias on Tesla as long as below 216. And once again, if we break down that 210 level, I am favoring we drop all the way back down to 200 to 198 zone. Okay, I'm not trusting any bounce unless, well, I do have resistance level at 212 and 214 as well, but I'm not trusting the bounce unless 216 can recapture and maintain and turn into support. All right, IWM total, look, it actually lost the 50 DMA Thursday, and it definitely showed follow through at the end of the week on Friday, running into the next fib level, which is around 27.4ish. I tell you this, if IWM can break it down, I think we could drop a lot lower down to 204ish. And the 200 DMA is actually around 202. Definitely big targets that I'd be watching for if we break down the 207.4 level. All right. I do have resistance at 210 and 211.8. Trust no bounce unless we recapture those levels, guys. The 50 DMA is at 212.4-ish. It's going to change, but just put it on your charts, guys, and just when the market opens, just see where it's at. But bottom line, bulls will definitely need to recapture that because there's no bullish market where price stays below the 50 DMA. So at the very least, if you're a bull, that's what you want to see recapture mainly. Critically is that 50 DMA. And unless that recaptures, I can't fully call a bottom, if you will. All right? Remember, loss of 27.4, elevator down continues. Trust no bounce unless we recapture critical levels. 210, 211.8, and the 50 DMA at 212.4 as of right now. Now let's move on. I think a lot of people like this to the dark pools and the option flow. Okay, as mentioned earlier, we had big money coming in at 549.55. All right, that's what we got on Friday. And remember, on Thursday, the day before, on Thursday, that's right around the area that the SPY closed. And we saw what happened when SPY broke down that dark pool level. And now we got a low or a close around 540-ish, which also happens to be with the other amount, the other big amount of dark pool orders came in on Friday, showed around 540-ish. It's almost like they're setting the range, guys. Look at that. It's almost like they're setting the range, if you think about it. So if we know where big money is setting their range, then we know what levels need to break down. And if we are bearish, 540 must break down to trigger some more downside. All right. That's the dark pool levels, guys. Let's take a look at triple Q. Okay, triple Q, we got one at 461, but it's not even a billion. 854.9 million. I'd be a lot more, like I said, I'd be a lot more impressed when it's over a billion. This didn't even hit the mark, but it's worth noting for whatever it's worth, guys. 461 is where the majority of the dark pool orders came in. Let's take a look at Tesla. 200 mil. Now this is acceptable because Tesla just a stock. It's just one company. So 200 mil, 206 mil came in at 219.84, and then you got 101 mil coming in at 210.73. Add those levels to your charts. Look at 210.73, 100 mil. And where did Tesla close on Friday? 210.73. Where's the dark pool level? 210.73. It's like they're setting the range, guys. So we know that if that's where their low is or whatever, we're gonna use that as one of our pivot levels. So 210.73, as long as below it or we get below it, I'm gonna be bearish. Okay. Let's check out NVDA. 102.83. That's a big one for a stock. 650 mil. That's more than half a bill for a stock. That's a lot. 102.83. Okay. Where did NVDA close? 102.83. This is not a coincidence, chat. This is not a coincidence. This is incredible. This is incredible information. And I'm telling you right now, if we get below that level, bearish. If above it, there's a possible chance of a bounce. But we need, like I said, we need to clear those resistant levels. But if we're below this level, guys, sell-off continues. They're pumping a lot of money. It's a lot of money. Okay, this is not an opinion. This is facts. You guys see the data for yourself. I'm hiding nothing from you guys. IWM, 207.9, 207.90. And where did IWM close? 207.90. Let me tell you guys something. We're seeing a pattern here, and it's safe to say, at this point, I don't even think it's an opinion. It's still an opinion, but I don't think it's an opinion. But these guys, these market makers, they're cooking something. They're cooking something, guys. And you know something? We know the pivot levels. I feel bad for those who's not subscribed to Uncle Chartist, is not a fellow sheep, because we got the information, guys. Bah! All right, let's take a look at the flows. Okay, let me show you guys my filter. So this is how Uncle looks for his flows. Okay, I go for 100K premiums or above. Why? Because I only want to know what the big money's doing. I don't care what little money's doing. I want to know what big money's doing, right? Expiration date, I look at all expiration dates, okay? I only want to know above the ask. So I don't want the ask. I want above the ask. I want to look at the most aggressive, right? So I want sweeps and I want out the money. And what do we have? And you guys see that. These are the most aggressive plays that the big monies are doing. And they're overall bearish. Higher quantity. Yes, there's a higher quantity in calls, but there's bigger money per contracts or whatever into puts. So while there are some calls, bigger money going into puts. Now we got to look at the context, right? So we have a call here, right? For example, 542.5 strike price. They enter around 541. But here it is. Here's the expiration date, September 6th. So when I see something like that, X, that's nothing. That means nothing. It's already gone. You see what I mean? So bearish, look at this. SPY, November 29th, 479 strike price. They entered around 540. Guys, this person who put almost $400,000 in their contracts, they're expecting SPY to drop like what, $60? Uncle can't do math right now. This is incredible. Look at this, 530 strike price for September 20th. You see, they got time. The puts matters more because they got time. It's big money. Look at this, 528 strike price, September 20th. Okay, and then you look at the calls. Okay, we got one September 11th, 553. This person is expecting to bounce this coming week. Something worth noting, I guess, but 100,000. This person for December 20th, 579 strike price. That's pretty aggressive. They definitely have time. That's pretty aggressive. So that's something to keep in mind, guys. There are some big money players that is trying to get in on a bounce here. So something to keep in mind. Okay, we see more here. December 20th, 570. So keep that in mind, guys. These are starting to come in. April 18th, 560. And these calls don't matter. September 6th. This put doesn't matter. We got one 542 strike price for September 20th. Okay, we got a 625 strike price. That's for next year in June. So we're starting to see big money sneak their way in a little bit, guys. It's something we got to pay attention to. 625 strike price for June 20th. There's people thinking it's time to buy the dip. It's amazing. 550 strike price October 18th. 563 strike price for November 15th. Okay, so we do, all right. It's overall bearish, but we are seeing big money players feeling more comfortable coming in. Do they know something that we don't? I'm betting that they do, especially with CPI. So guys, it's overall bearish still, but just keep in mind about those calls that are starting to come in, guys. All right, triple Q, it's overall bearish and it's a higher quantity. Let's take a look at the calls though. 450 strike price for September 9th. Okay. So they're expecting a bounce this week. This one is 454.8 for September 20th. But we're still seeing some aggressive puts coming in. 439.8 strike price for September 20th. 449.8. That's okay. But yeah, just something worth noting. Something we're seeing now that we didn't see earlier last week is that the calls are starting to aggressively come in a little bit. All right, we'll see if it picks up as the week goes on. Okay, something to worth mentioning, and Uncle will report it to you. Tesla, it's bullish. Let's take a look at the context though. A lot of these puts are for later in September. This is expired. This is for this coming week. The coming weeks. All right, so the puts are a little bit short term. Yeah, this person probably made big money. This person probably made big money. I don't know if they're still holding it puts, but they do got time. But something worth noting is this one. February 21st strike price. Expiration date. 215 strike price. They enter around 213. They're probably down on it right now a little bit, but check it out. The premium they paid was $3.9 million. This makes me wonder, what the hell are they thinking? Because it's not that out the money, but it's $3.9 million. Are these hedges? And if it's hedges, what are they hedging against? Do they know something we don't know? But if it's not hedges, why only 215 strike price? Why not something more out the money? I don't know. We're gonna find out. But they did enter 213.72. That's around where they entered. Some people I know, they say they like to use where the big money entered as support and resistant level. Just something you guys can think about if it's worth trying. All right. But that's where they end around 213.72, 215 strike price. Let's see if Tesla's going to bounce. Yeah. Am I missing anything? Did I get NVDA? I got NVDA, right, guys? Did I get IWM? IWM is bearish as well. Still got 192 strike price for this put November 15th. But we do got big money coming in for calls. 224 strike price for December. 212. Yeah, guys, there's something worth noting. I know a lot of people are bearish right now, but keep in mind, according to the option flow and there's a lot of big money players that are looking at this as a buying opportunity, as you guys saw. All right, guys. So I hope you guys found value in today's video. If you didn't, please subscribe to my channel. Please give this video a like. And if you want, definitely join Uncle's Discord to get more content from me. I appreciate you guys' support. Peace.